Welcome back to the NoBS show. I know I'm late to put out a video, but don't worry, we're going to get caught up on everything that's been going on, and there's definitely been a lot going on. So first, let's go ahead and get caught up on all these headlines. So first, let's go ahead and do a little recap of what's going on with COVID. If you've been watching mainstream news, you'd think that COVID was gone and no longer an issue, but China's still in lockdowns. And there was a document that was released but not confirmed that they would continue those lockdowns all the way until May even. Here in the US, we saw reports that Nancy Pelosi had gotten COVID even, and cases continued to spike overall. But even when you watch these meetings, whether it's a Fed meeting or whether it's a government press briefing, no one's wearing a mask anymore. Maybe there's like one or two, but for the most part, people have just, been carefree about it, despite the fact that the most common variant that's out right now is not protected by the vaccines that we currently have out. So, it is what it is. It's not affecting the market. We have seen some of the, Merck and Pfizer have some minor rallies. But other than that, that's just what's going on with there. These China lockdowns do have repercussions when it comes to supply chains and when it comes to demand for energy, though. And as far as the war in Ukraine goes, we did have peace talks that took place in Turkey, but they ended in both sides of the peace negotiations being poisoned. Now, this is something that we've seen Russia do before. There was no confirmation on who did the poisonings, but this has been kind of like a baited headline, and it kind of feels like a Trump tweet as far as the effect on the market, where you get these rallies in anticipation of like, oh, everything's going to calm down, and then boom, nothing works out, it falls apart, it doesn't occur. It's been kind of ambiguous as what's going on, or even what's going on in the environment. We've seen lots of baiting headlines, which we've talked about before, but they continue to happen. Right now, things have been kind of quiet, though, so I don't know if things are calming down or if we're just not getting as many reports as what's going on. We did have that report of Will Smith smacking Chris Rock, and it was like immediately everyone forgot Ukraine even existed. So, it is what it is. That's the nature of people. You can only keep, things in the headlines for so long before the news cycle will shift. I do imagine this will come back, though, and probably affect the market in some way. Even though the market hasn't been reacting to anything that hasn't dealt directly with the Federal Reserve, I still think that this is mostly a news-driven market and that headlines will have big effects on it. And speaking of the market reacting to the Federal Reserve, we are seeing lots of reports when it comes to that. We had the FOMC minutes on Wednesday. It was very hawkish, even from some of the most dovish Fed members that were claiming that they wanted now a 50 base point rate hike. And it's quite concerning because most expectations right now seem like the economy will slow down in summer. If they continue this aggressive monetary tightening into a slowing economy, as I've iterated before, I do expect a crash in anticipation of that. And when that crash could occur, who knows? No one knows, right? That's the nature of bubbles, is they don't burst when you expect them to burst. It's unexpected. It usually burns as many people as possible. That's what happened with the dot-com bubble, and that's constantly now it's plaguing my mind, especially in this incredibly irrational market. And before we talk about that, let's cover this report real quick from Tyler Durden himself. This former Fed president wants to bring these Fed funds rates to 3.5%. We've seen Goldman even say that they need to bring it to 4%, which is, I don't think any of this will happen. I do just want to bring it to your attention that this is kind of how the conversation is going. Probably won't happen because they'll probably need to immediately reverse their trajectory and turn around and then provide stimulus to the market instead. And one of the things that's really blowing my mind is they're not talking at all about the balance sheet, like at all. The balance sheet is huge. The balance sheet is what the market's really been reacting to. These rate hikes, anticipations, bond markets inverted from it, yes, and markets have kind of sold off from it. Will definitely have sold off from it. But I think the balance sheet is really what's going to hurt this market. We could have massive debt issues. You have to think about how much debt some of these companies are carrying. If they don't have a direct plan to make money, to get rid of these debts, they are in dire trouble in this type of environment, and it's really worrisome. And I'm worried about even crypto in this environment now. If we do see that slowdown in summer, and we do see this market come down, I do not expect cryptos at this point to disconnect from the market and be that safe haven. And I am worried about a crash. Bitcoin probably hitting like 16,000 or Well, actually, that's about where I have the lowest at right now. It could go lower though. It's not something that I can say with certainty. It's just something that is definitely now a concern for me. I've kind of tried to accumulate more cash in this environment, and I've kind of pulled back my trading a little bit as well because I know that this type of environment is geared to catch you off guard. And any sort of dire headline or black swan event, remember China invading Taiwan still on the table. I'd say there's probably about a 15% chance of that occurring, which is really high when you think about it. All right, I would prefer that at 0. So there's a lot going on, and all of this just seems so bearish. But this market just keeps trying to go up. So let's tune into the graphs. And as you can see in the bottom right-hand corner, we had that high on Tuesday. Then we had the FOMC, tons of chop. Market didn't know what to do about that. And then we've had these kind of like sell-offs into fake out rallies. And the thing that's really concerning me is retail traders, option traders especially, seem really bullish. I've noticed every day lots of call buying. And it's been a little ridiculous because this environment, to me, it fundamentally feels so bearish. Yet, I mean, look at this. We're near all-time highs. You know, we had the 471. We're $30 off the highs. It's crazy to think about when you consider what is actually going on. I mean, just look at that. It doesn't make sense to me, at least. IWM's having a little bit more trouble. It's been a little bit easier to trade as well, with a lot more dramatic sell-offs. This is because these companies tend to carry all the debt, right? And then we look at DXY, which is the US dollar futures. We hit $100. And this is really starting to build that base case for that dollar milkshake theory. If you haven't checked out that video from Real Vision, check out the Discord. We've been sharing a lot in there. And other news, and actually I'll pull it up here for you. We also had, does this one work? Hello? Yeah, we also had Elon Musk buy a bunch of shares in Twitter, and we got a huge rally out of this stock. Apparently, he broke the law by not disclosing his purchase when the SEC wanted him to, but he's Elon. He doesn't respect them. He doesn't care what they want him to do. And honestly, if I was him, I wouldn't either. I don't blame him at all. They're going to slap him with some minor fine. He just spent a ridiculous amount of money. I bet it's nothing compared to the money he would have saved if he would have disclosed it sooner. And the reason he's doing it, I think, completely justifies it. I definitely am for free speech, and I want him to make changes at Twitter because I like using Twitter. I'm fine using the other platforms, but if I don't have to make a whole new page and then use that for social media, I'm kind of lazy when it comes to this stuff, so I'm cool with that. He's also put out a bunch of fun memes about the next Twitter board meeting. Some of the changes he wants to make are the ability to edit your tweets. He wants to, bring back President Trump and other people that have been banned and set just hard rules in support of free speech. He did also mention making the base code for Twitter open source, which is cool. And then if we pull up some of the energy stocks here that I've had my eye on, CCJ, which is uranium, we've seen this trying to test new highs. And then if we look at USO, which is oil, we've seen that this has kind of come down a little bit. But if we really span out here in the year, we can see that this is kind of setting up for that super cycle we were talking about. This looks like a wedge kind of developing. I do expect this to pop off. I do expect, this $70 range to be the new low. So I expect that to continue throughout the year. Even if this economy slows, one of the things that I had to kind of back test and research was, do these energy prices tend to come down in recessions or even in more aggressive economic crashes? And actually, they tend not to. They can be persistently high and still have inflation come down even, which is something that actually surprised me, but that's good to know and good to keep in mind. And when it comes to uranium, though, I expect this to stay high no matter what. And in fact, I'm waiting for the reports that the U.S. is going to take more interest in nuclear energy. Maybe that comes around near elections. Maybe Biden doesn't want to make a move like that before the elections. And remember, the elections are going to be a big deal, okay? Especially as we start to hear some news about who's going to be running. Will Biden run again? This is going to affect decisions they make massively. It's also going to affect how the Federal Reserve acts because they don't really want to make big decisions before the election because they're so politically, how I want to say this. They're so politically manipulated is what I want to say. And that might make me sound like a conspiracy theory, but it is what it is. And I guess one of the last things I want to mention here is UVXY has been a big indicator for me. We saw it get really bullish today, but this 310 mark that we have right here, actually, if I probably come out to the 30-minute, we could see what a major support this is. And I do expect that since we hit that to the close, that it could mean some more blood next week. And remember, we also have that inflation data coming out on Wednesday next week. I expect that to be some of the worst inflation numbers that we've had in decades. And we've actually seen this occurring globally all at the same time. Germany just put out some of the worst inflation numbers since like 89 or something. And yet their interest rates are at 0, when previously they were at something close to 14% or within that range. I don't have the specific number in my head right now. And remember, if you check out the Discord, I'm always putting out updates. We're live usually all the time for subscribers. Next week, we're also going to do some public live streams as well. So make sure you click on the link in the bio and check that out. And of course, if you can see right here, the clothing's out. If you check out the link in the bio, you can pick up some of your NoBS trading merch. We also have some fun crypto merch as well. We also have the t-shirts, which I'm wearing right now. I'm not about to strip, don't freak out. But we also have the t-shirts here too that you could check out. If you get these, this is a large and it's fairly tight. The hoodie's snug. The t-shirt's probably a little too tight. So I'm like 6 foot, 210. Maybe go for an extra large. And if you tag me in a photo of your new NoBS trading merch, you'll also get a free month of subscription, whether that's on Twitter, Instagram, TikTok, YouTube. Can you tag people on YouTube? I don't even know if you can tag people on YouTube. Whatever it is, send it to me, DM it to me, and you'll get a free month. And like I've said before, this is just not an environment where I want to do stock picking, and which sucks because that's what I like to do. I like to research companies, learn about new innovations and what's going on. But this market is so macro focused, and there's, the Federal Reserve is basically controlling everything that's going on, that narrative and the geopolitical narratives. That's what you got to keep up with right now, in my opinion. Sure, there's lots of penny stocks and small stocks that are doing well, but that's just not my trading style. So it's kind of sucks for me because I don't want to suddenly start becoming a penny stock trader when I've never really done that. Well, that's a lie. I started out as a penny stock trader years ago in college with pharmaceutical companies because of my background in college. But I haven't done that, and I didn't have a lot of success doing that. I don't want to go back to that. Trading the macro, trading energy has done pretty well, so I've been sticking with that. But it kind of sucks because I like researching individual companies and then looking for catalysts and doing all that hunting and then setting up the TA, having a good trade to go for it. And right now, it just doesn't feel like that's a good idea. So I've been playing on indexes and just kind of piddling with options, doing more scalping than I usually do, which has been kind of fun. I've been using some of my TA, which I usually don't use that much. TA is typically only about maybe 20% of my trade setup usually. And right now it's like 50%. So it is what it is, I guess, but it's not what I enjoy doing, and that's not specific to my trading style. Of course, if you're a new trader watching this, you need to find your own style. Everyone's going to have a different style, but being around people who are trading, who are doing well, is so helpful. Even for me, I had mentors. Some of my mentors are, popular Twitter guys that I just constantly DM'd them ideas until they're like, well, this guy might know what he's talking about. And then we became friends, and, it's great. But that's why I built this Discord, is because it's such a great tool to help people learn about investing and trading. So in this environment, I can't reiterate it enough. It's a scary environment. It's such a terrifying environment. And I feel like a crash is imminent. And I know I said before that you can't really predict crashes, but I will go ahead and put this in the video just so I can look back and say, hey, I called it. I do think that it'll probably occur this summer. Probably later in the summer. And I will be skittish of energy heading into that. And the best way to play that is, for me, holding a lot of cash and some puts. I don't want to all in on the anticipation of a crash and then see something like the Dollar Milkshake theory play out and all the money pile into the US as a safe haven. And then, you maybe get a quick flash crash and then boom, back to brand new highs. I do think even if the market crashes, you could see new highs at the end of the year. So, pulling out completely, probably not a good move. If you're in crypto and pulling out of that in anticipation of it trending with the market or trying to time a bottom, probably also not a good move. We also could see an effect where you get that initial crash and then another one. Honestly, it feels too soon to call, but right now with everyone wanting to be so bullish, like if we see that continue to build, I do think that the more this market goes up, the risk with it, in my opinion, will be exponential. Okay, so if I see people start to get really bullish, I'm going to start getting really bearish. And if people start getting really bearish, I'm going to go neutral. That's the way I'm going to handle this, because it's just a scary environment. I've been trading about a decade, so I didn't trade anything like in '08. I did trade the 2018 flash crash that we had, but that was just a flash crash that was done in like a week. So this type of environment is new for me. This type of the things I need to watch for are new to me. And a lot of this has been constant research, constant keeping up and kind of tracking what's going on. And honestly, just kind of being a little bit more backseat, sitting on the hands than I normally would be. Just trying to be open and honest about it for how my journey's going. But it's been a great time to also keep up what's going on with like NFTs. You know, we did the video about the Hot Wheels NFTs and been tracking different projects. I set up my MetaMask wallet and kind of peddling in different brokers and trying out different tools, looking at some futures that you can trade with Bitcoin and Ethereum. That's been fun. Haven't made any big moves there. Maybe we'll do a video about it. If you want that video, go ahead and leave a comment down below. And I mean, tell me what you think about this market. Is there a topic you want me to cover? Is there a company you want me to cover? Nothing's really got my eye, but I wouldn't mind doing that. It's what I enjoy. And honestly, we're probably going to go to just doing one video a week, because until we actually see this environment make a major change, there really isn't as much to cover. If there's a major headline, I'll try to do a TikTok about it, do a little YouTube short. But right now, this is kind of what I'm seeing for the market. We'll still do our Sunday night videos. Those are going to be mostly private videos. Once a month, I'll do one free. But right now, that's what's on my mind. That's what I'm seeing in this market. I do think it's a concerning market. I do think it's a very irrational market, and I'm concerned about the way people are handling it as well. Okay, I do want to add this at the end of the video just to paint some more pictures and more potentials here. Let's say you don't think the Dollar Milkshake theory will play out. I've considered that as well. And I've gone back to like 2000 when I'm kind of trying to paint my narrative of how that could go. You know, back then we saw the market kind of rally in February, and then we saw months and months of just a downtrend that had very little liquidity. So I'm kind of thinking if there's a bunch of option traders, they could get burned, so they could not have buyers. People could panic sell and they can't get out. We also saw a bunch of hedge funds back then also blow up. Now, this could make you think like immediately like a Kathy Woods, where she's got this big innovation ETF. She's an active trader. Like, could she get burned in this environment? And you know what? She could. I do think she'll have a lot of money get pulled out of those funds. And so that could cause her some liquidity issues, which could be really endangering to her. Now, I will say that in the long term, I do not see this like the dot-com bubble, though. Back then, a lot of those technologies, people were excited about the internet, but everything was just like a one-page web page. There wasn't a lot of active application of those tools. And I feel the same way about crypto. Hold up. This is Post-Edit Josh chipping in to stop past Josh from misspeaking. I'm not comparing crypto to still web pages. I misspoke right there. I'm about to talk about the metaverse. That's what I was referring to. I think there's lots of crypto projects that have applications that are usable now, although some of them may need a few years. You have to think about something like Amazon, where it crashed 50%, but where's it at today? All right, it's all about time frame. Okay, back to the video. Especially the metaverse seem kind of, you know, a little ahead of their time. Like they need probably another 5 years to really develop. Things like biotechnology are here. They're here. There's new innovations coming out every month right now. And so, and especially during this time periods of war, that's tended to be when new technology starts to erupt. So if this continues, the geopolitical environment continues to have turmoil, especially the issues in energy. I think that'll push us to nuclear energy. I think, you know, all the virus stuff, if this comes back, becomes more of a major conversation, it'll push biotech forward. This turmoil might seem awful in the short term, but what's on the other side is usually better. So even though I see everything very bearish, I think we're in that fourth turning, which by the way, we're doing a video and I think that'll be out tomorrow. I hope so, because I've been wanting to put it out for a while, but I've been working on it. I've had to do tons of research about like the Roman Empire and stuff. Anyways, I do think that on the other side of this will be great, and I'm excited about it. But in the short term, it could be rough. But I don't think it'll be the same type of, oh, we need to mass evacuate tech, which, by the way, what do these people even mean when they say tech? Because I hear the word tech, and then I'm like, what are you even talking about? Technology, what is technology? A tractor back in the day was technology, right? We wouldn't consider that technology now, but anything new that's innovative is technically technology. So that's the one thing that bothers me. You know, DraftKings is technology. You might just think, oh, it's just sports betting, but it's a new form of sports betting that can also be displaced by different types of crypto sports betting, which actually, I shouldn't even call it sports betting because you can bet on literally anything, like how many times Biden says, So anyways, I'm derailing myself too many times. That's something that I just want to kind of put out there. I think that if you're a growth investor and you're already down a lot on a bunch of your tech stocks, but you're going to be there for the next decade, if these are solid companies that have passed towards profitability, like something like TDoc, I still have a lot of faith in those companies. Even if there's a crash and you just want to put more money into that account coming into that crash, I don't see why that would be a bad decision. Now, granted, I've never traded through an environment like this, so this is not a recommendation. Remember, this is all for educational purposes. If you follow me, you're going to lose money for sure. So I have to say that. So the point is, be ready for those potentials. Keep an eye on these things. And in the future, we're probably just going to cover a lot of news, and I'll cover most of the trading on those private Sunday night videos. I hope you enjoyed this episode of the NoBS Show, and I'll see you hopefully tomorrow, definitely next week.